Hello everyone, my name is John Paul, DayTradeToWin.com. Today is Thursday, February 20th, 2020, Thursday. I had a webinar on Wednesday. Hopefully you're able to see the recording. The room was filled to capacity, so some of you couldn't be able to watch the live webinar, but I do have it available on YouTube as well as the DayTradeToWin blog and the videos page that we have on DayTradeToWin shortly. Today's video is going to be discussing first of all, the signals that are very good here, the Atlas line long and the Atlas line short, as well as the Trade Scalper signals. But more importantly, it's not just the signals I want to discuss, it's the high volatility that's occurring as we speak. This is a problem because the risk involved with trading is so great under these conditions that sometimes it's best to just step back and say it's not worth getting involved with this type of chaos and volatility until the market gets back down to normal. So to begin, remember, trading is risky. Please do not trade with funds you cannot afford to lose. Talk to your broker. Ask us for a SIM or a demo account. We can help you get set up so you can practice and you can start trading and understanding how the markets work without having to risk any of your own money. And then when you're ready to go, you start with one contract and then go to 2 and 3. But it's important that you practice and understand that trading is risky. So the first trade of the day here for the Atlas line, which everyone has the same signal. There's no optimization. It's a 5-minute chart. You load the Atlas line signals and the software on NinjaTrader, and then you see the signals appear to go long, to go short, pullback, strength trades, and so on. So the first signal long here on the Atlas line, let me just adjust this here, is at 33.85. Again, everyone has the same signal. 33.85 with potentially 3 points of profit. The average true range, the ATR, is what I'm using to dictate my stops and my targets to help me as I take this trade and manage the trade. And there's a lot more to it, right? There's stops, there's prove it stops, catastrophic stops, time-based stops. I discuss all of this in the videos that I do. For the new traders that are interested in learning more about price action, please take a look at the videos or contact me and I can guide you in the right program to start off, especially if you have tried trading with indicators but now want to focus on price action. The ATR allows me to understand the expectation. So at the expectation at this point in time that the market will move up or down is 3 points, 3.17. So I'm rounding down. The E-mini S&P works in quarter point increments, so 3 points. 3 points is what I can expect. So as we move forward, and by the way, 3 points is roughly $150 per contract. So every time the market moves 1 point, it's $50. 3 points is $150. So now as the market moves into the future, I can see that it did in fact move the 3 points. If not more, it went to 4 points. There's a little bit of trade management involved as well. As the market begins to get slower and slower, which is normal, you can adjust your profit target as well. So there's a few things that as a trader you should be aware of, not just a hard stop, not just a hard target. Use these other techniques and trade management skills to get you out of a trade earlier if you need to. Use time, use proof, and also adjust your targets and your stops based on the current conditions, and that's why I'm using the average true range, the ATR here. So this trade here was successful. Now as we go forward here in time, the next trade on the Atlas line happens right here at 11:20, about 11:20 Eastern Standard Time. Short 33.74. Now my expectation is 3 3/4 of a point, so almost 4 points, but not quite. And so as we move forward into the future, can I make the 4 points here, or the 3 3/4 of a point? Definitely. The market moved very quickly in the favor of your trade. Remember, I'm not concerned with the 11 points unless you're trailing a stop. I'm only concerned with making what I expect based on the current conditions, which are, as you can see, 3.83 round down, 3.753 and 3/4 of a point. So once the second trade is finished, and so 2 successful trades back to back, we're looking at a new opportunity. But what's happening is that the market has increased so dramatically in the volatility for whatever the reason. This could be news driven. This could be some world event. Whatever the case may be, and not that you have to have the news running in the background and you need to know what the news is. You should only follow the candles and the price action to help guide you through the day. Whatever is occurring, whether positive or negative news, is outside of our control. It's outside of our influence. But the candles will tell us that the market is increasing with the volatility, and that way I can choose to trade or not trade or adjust my target, adjust my stop. This, by the way, is indicating that the market can move 9 points up or down from where we are. Obviously, if you have a small stop, if you have a tight stop on any type of trade that you take, this could easily go up 4 points or down 4 points or up 4 points, and this creates a huge problem if you have a tight stop. So that's my recommendation, not to trade under those conditions. Now, live, you've just seen these P's occur. It's telling me that there's a pullback trade to go short. In my opinion, you should not trade at all because the risk to go long or short is too great with such small or smaller stops that we like to trade at. So personally, even though this trade may be a success, it's worth not trading under these conditions. So this is the Atlas line. We have 2 successful trades under normal conditions, and now the market has increased greatly. Stay away. The market will get back to normal, absolutely. It may take a few hours. It may be right away, and in the next 10 or 15 minutes, we could get back to normal. But for right now, it's not worth it. Now, if I switch gears here a little bit and I take a look at the Trade Scalper, we have a lot of trades here on the Trade Scalper, obviously, right? We have a short at about the same time that everything started to nosedive here at 10:30. We have a long 33.86, which was successful, but then we have the short, another short, another short. This is all coinciding with what you're seeing on the bigger picture, the 5 minutes. And now we have, right now, another short. Now, scalping is different. The trades that we use for scalping are very tight, 1 point target. The stop is equally as tight. You don't have to risk big money on the stops. So from here to here, if I just want a point or two due to the volatility, the market already made that instantly within 5 minutes. So for scalping, there's not really a problem under these conditions. Keep your stop the same. And when the trades appear, get in, trail a stop, hold on to it. The volatility is helpful because you can take a little bit more, but remember, keep your stops in place when scalping. The maximum risk on this trade, here, let me expand it for you. On the Trade Scalper at 11:45, 11:46, short at 33.53.75, which the market gave you 33.53.75. The maximum move against you would be a point and a quarter, which is nothing. This is a point and a quarter, and these type of conditions is absolutely nothing. And then the market went straight down. If you have any questions on the Trade Scalper or the Atlas line, please email me, support@DayTradeToWin.com. The next mentorship class, February 27th, includes all of these programs, Atlas line, At the Open, Trade Scalper, Roadmap, the Blueprint, the X5. It includes all of the methods with one discounted package. It's 8 weeks of mentorship. It's well worth the price, especially if you want to understand how price action works. You have a variety of tools, and especially if you put them together to help you trade throughout the day. All right, so this is where we're at right now. Okay, we just had a long 33.56 quarter. So let me show you how this works. 33.56 quarter.
Order submitted. Order filled.
Okay, 33.56 quarter is my entry. I'm sorry, 33.60 650, which is obviously a tick of slippage because I'm using a market if touched. So entering long at market, your stop is here. This is your target. If we just want a point, that's the target. So look, the market is moving already 2 points in our direction. So if I placed here
Order submitted.
a sell stop,
Order filled.
I am out and done. Those of you who have the Trade Scalper, you just had an opportunity to grab a minimum of a point on this trade here. I did it live to show everyone the expectations. Today is February 20th, 2020. Have a great day. I'll see everyone tomorrow. Take care now. Bye-bye.